Hey everybody, welcome to Trading Capital's daily analysis video of the major indices. Jumping right into the S&P 500 here on an intraday basis. What a tremendous wild swing on Options X. This is why we talk about Options X so much and the importance that it holds on a specific week and especially on a specific day. The swings that you can see on Options X are incredibly opportunistic, but just very, very wild. And that's certainly what played out on Friday. You can notice here that we opened on Friday, gapped up immediately, had a little bit of a rally up pre-market, put in this little bit of a doji topping tail, and the selling just commenced all day long. We had this original bearish flag pattern that clearly broke down, and when you measure this pattern, you basically went all the way down to the 618 fib zone, pretty much to a penny, which shows you that the 618 is one of the most powerful fib levels that you can use just as a basic guide to see where there's potential support lying. And that certainly played out to a T. So this bear flag pad triggered, but this is all Options X shenanigans. Look at the late day rally in the last 2 hours of the trading session. Truly something to behold your eyes on. This is something as a market technician is just truly incredible to watch, because when you see this type of power surge, bull flag, and breakout final push up on the end of the day to basically drive certain stocks to a certain level that flushes out most of the retail option and put contracts on the market, when you know there's 2.7 trillion on the line that's essentially exchanging hands and being awarded to people where they're right on their options or where they're wrong, and most of the time that those options contracts are being rewarded to institutions that sell them, it really shows you that the markets have so much liquidity at any certain time that they can just push things in certain directions in the short term. So this is clearly institutional buying causing the markets to float back up and push certain stocks out of those call or put ranges. And what's interesting is we truly just finished flat on the day. It was actually slightly positive if you include the after hours, but realistically it was very flat in terms of where we initially finished. But when you factor in the amount of selling that was occurring, shaking out those longs, causing so much pessimism, the bounce is never coming, and then you have this type of rally on volume, it's just something that is truly incredible, and the markets always seem to surprise you. When we flip to the daily chart, let me just take away this parallel channel. When we flip to the daily chart, what's interesting is you can clearly see we broke and made a new pivot outside of that trend line. We did come into some support. It is also a major 382 fib retrace zone. So there is some technical support there, and that's what we saw. And the interesting thing is you did not close below this pivot. So although you made a new wick low, you did not close below the lowest closing price. You actually closed above that, which shows you that this was all a manipulation tactic to scare people out of their positions as the markets were falling. And that's why it's so critical to wait for confirmation, because we're still in the camp that the markets were going to have their bounce. Even if it was selling off and breaking a new support level, the markets were extremely oversold. And not just the markets, so many quality names have been beaten down, and they do and should have a technical bounce. The probabilities dictate that, some sort of a mean reversion event. So in the short term, this is bullish because we closed above this previous closing low here. You did make a new wick low, which on a technical standpoint, charts are always looking to make a new lower low and then rally from that low. So this backs up the overall thesis that once again the markets have that higher probability of being tremendously oversold. Such pessimism and the fact that you have made a lower low, they do have that ability on a technical standpoint to rally at least back into the next resistance, which will be this gap fill and this pivot low here. And what's interesting is you did close with inside this channel. If I just correct this channel to this pivot low a little more, you closed right on that channel, which is something really magnificent as a technician that we look for. Is just these little technical nuances. Where did you close? How did you close? Did you close on a support level, above a support level, below a support level? This is all things we consider and factor into the probabilities by identifying which patterns are more likely to play out. So truly interesting price action on the S&P 500. I do think we get that bounce now that the markets have been looking for. There's key technical gaps that I do believe we should fill and have a high probability to fill. So I'm certainly waiting for that. If we jump to the QQQ, Nasdaq is also very interesting. I love analyzing these types of charts. Let me just erase some lines here. Notice again on the Nasdaq, you made a new low, but closed above that previous low. So the same type of price action as the S&P 500, which is really, really beautiful to see. You actually closed with inside of this down sloping parallel channel, which is a short-term bullish sign for myself. I think you still retrace back to this longer term trend line. That would be your big level of resistance that I think you run into at some point in time. But analyzing the Nasdaq, let's flip to the weekly chart. This is something that is so critical to understand, and the S&P is very similar. When you have 1, 2, 3, 4, 5, 6, 7 down weeks, 7 consecutive down weeks on the Nasdaq in a row, the probabilities dictate that you are very, very likely to get that bounce. And I'm certainly comfortable taking those odds, even though I know the longer term macro pattern is for the markets to go lower, because we have room to maneuver and add to our positions and put ourselves in for that beautiful bear market bounce that will come. There's a lot of pessimism. You know, people are saying the bounce is never going to come, the bounce is never going to come. But this type of price action, 7 consecutive down weeks in a row, that's what draws out that pessimism. And you just have to be cool, calm, and collected, because there's tons of people that probably went all in around this support level thinking it'll hold. And they do not realize the power of bear markets and the need for really controlling your position management and not going cowboy or all in on one specific stock or sector by, you know, putting 50% of your portfolio in that on one single level. So clearly inching in, dollar cost averaging at massive technical areas of support, using many signals that confluence at the same time is going to give us the best opportunity to profit via swing trading this market. And we certainly have been on the right side of the trade so far in 2022, so we would like to keep that momentum going. But what's also interesting about the Nasdaq is if we keep sticking on the weekly time chart, you're on a 7-week consecutive time count. The most the Nasdaq has ever fallen in its history is 8 consecutive weeks. So I certainly like the odds and the side that we're on, positioned for bounce. You notice that we covered 3 of our short trades. I did not like how they were potentially consolidating. I mean, Archer was a beautiful win. Flying cars, of course that's going to get demolished. We've traded that now twice in less than 3 weeks, and we've profited double digits on both swing trades in a very, very short time frame, which is the best type of trade that we could ask for. Is double-digit gains in a short window of time is just incredibly important for building our portfolio over time. But nonetheless, flying vehicles, complete speculation. We also covered our Caterpillar short. It was coming into resistance, major institutional area of support that was occurring, and I think with the overall markets likely to get a bounce, these stocks can obviously trend higher with a potential short-term stronger rally in the markets. We also covered our firm short just for a small gain. I did not like how a firm was consolidating, potentially putting in a bull flag to move higher, especially if the markets are favored to have a technical bounce of, you know, anywhere in the range of 3 to say 8% or 4 to 8%. Then these stocks can certainly have the wind at their backs for the short term, which would inevitably push them higher. So why not take our profits? We can always look to re-short these same names if they do get that technical bounce with the markets. And that's certainly what I'm going to be looking to do, is unload our longs once the market bounces and look to accumulate, again, quality technical short levels in a variety of the names that we've already shorted throughout 2022. Let's take a look at how the Nasdaq has collapsed over the last 7 weeks. So over the last 7 weeks, the Nasdaq has fallen 24%. But when you factor in the Nasdaq at the lows, the high to this current low, the Nasdaq has fallen 31% in essentially half a year, 6 months. And that has officially fit the criteria of classifying the Nasdaq in a bear market. A bear market constitutes a 30% decline from the highs, and that's what we just got on Friday. Now, the interesting thing is with the end of the day rally, that bear market has now been negated. You did not get that weekly close of the bear market, which is why I think this could be the potential last hoorah rally before the markets start their next precipitous fall to their next key support zones. We're still going to trade it no matter what happens. We are fine with all outcomes. We're positioned to succeed in this type of market. So let's just factor in the fact that you did not get that weekly bear close. The bear market poked its head out, reviewed, just kind of giving a little bit of a refresher, really spooking those retail traders out of their long positions. And then as the markets bounce, I think those people again, pile back in. They think the bear market bottom is in because it's classified and hit that technical 30%. But little do they know these markets have barely started quantitative tightening, and the real pain I think is still to come. I still think we have to see the real estate market really put some pressure across the board on the liquid markets. So let's just take that trend line away. Tremendous oversold conditions on volume, on a time count, into support. I think you have a lot of quality names that do deserve a bounce, especially when you have the likes of Netflix, Upstart, SoFi, Tesla trading at a better valuation, still needs to go lower. Apple's oversold. You have so many of the smaller to mid-cap tech stocks oversold. You have consumer staples now oversold, the likes of Walmart, Costco, Target. Even though they gave week forward guidance, their stocks have been caught in a fear panic sell-off as well as a margin call sell-off that has now driven the stocks, especially like Walmart, it has set a new record for its largest decline ever in its history of a company trading as a public company on the stock market, which is just something to behold and think about. Its largest decline ever in its history. That just should sum it up in terms of what type of market we're in. And when a stock like Walmart, a blue chip, I believe it was the 10th biggest company in the world before its precipitous decline that it experienced last week, and when so many institutional hedge funds have been hiding out in the consumer staples leading sector of 2022, and that gets crushed by over 20% in less than a week, those funds automatically get caught in margin selling. They get caught in over leveraged trades, and they have to dump. And that's why I think a lot of these stocks have fallen lower in the short term in terms of where they really should be trading at in terms of these levels. And certain valuations are starting to make sense for these companies, and it's really intriguing as a short-term trader to potentially catch these opportunities, but also monitor these potential plays for a longer-term investment. And that's the thing as a trader, since we're watching the price action more on a day-to-day basis, we're generally more likely to see that bottom form or that potential, the highest probability candle formation to occur, which gives us the signal that a bottom is likely in. I don't think we're near the bottom. Certain names do have a potential pivot low that we are trading against and could be a potential low in the markets, like Netflix and others, but we'll just have to keep monitoring that. And as the markets deteriorate, there still is that possibility that they can go lower, but we should get that bounce. In the Nasdaq, I think we get the minimum to the 310, 311 level. For the S&P, probably around that 5 to 8% gain on the S&P at the minimum. And we'll just have to monitor day by day. Thank you all for being members. I hope you enjoy your long weekend. Take care. And as always, stay tuned for more trade alerts and get ready for Monday's price action.